bringing you comprehensive coverage of market activities in Nigeria and across Africa, and of course straight off the close of market. This is Market Pulse, brought to you by News Central in collaboration with Nairametrics. I am your host, Joanna Mustafa, and on the show today, Kenyan billionaire doubles his stakes in Nairobi Stock Exchange best performing stock, which year to date. We'll also explore if Nigeria's 150-day duty-free importation window on certain food items could potentially destroy the agriculture policy, or is it more important to get food prices down and stable in the immediate? All this and much more on Market Pulse today, but first a quick market recap, and beginning with the NGX. The bulls are back, taking back the market. We're finally back to the 100,000 plus all-share index. Market continued their gains from yesterday, gaining 0.11%. All-share index is now at 100,075.56. Coming to the 5 traded stocks, right? We're coming to the top gainers. QTix is making a top gainer list 3 days in a row. When it comes to the losers, when it comes to the losers, last week and yesterday, of course, we had Red Star Express losing, now on the loser list. They have been on the winners list for quite a while, but they're falling down on that list. If we come to the top movers now, we can see the banks are dominating, right? They're continuing and tightening their hold as top movers. Zenith Bank, Access Holding, GTCO, all banks, UBA. Noticeably absent is Fidelity Bank, and perhaps we may have that conversation later on. Currency market, the Naira is down marginally, 0.6%. This is in spite of CBN's intervention and infusion of Forex to the markets. And of course, later on, we'll take a peek into other markets. But right now, we are going on a quick break. Ambrose will be joining us to break down today's market activity. Quite exciting across the African continent. You're tuned in to Market Pulse. Right now, we're picking up the pulse of the day with Chief Research Officer, Invest Data Consulting, Ambrose Omoridion, who is, it's a pleasure to have you join us on the show today, Ambrose.
Thanks for having me.
All right, we're going to begin in the Kenyan markets, where Bamburi Cement is getting quite the attention on the Nairobi Stock Exchange. Over the last week, its share price has gained significantly, and if you're looking at it year to date, it's the best performing stocks on the NSE. Now, just this morning, earlier today, it's been reported that local billionaire Balubhai Patel bought millions of Bamburi Cement shares, raising his stakes in Bamburi from 4.12% to 8.41%, pretty much doubling it. So what's the story driving the buzz around this particular stock, and will this rally be sustained?
Actually, look at Africa as a whole. As having an infrastructure problem in Africa, then seeing in a cement company, you know that there will be a lot of potential that will drive their, their earnings or their performance. For that, the billionaire have seen value in the stock, coming to accumulate that. They also seen that value also make me more become more richer. At the same time, don't forget that even in Nigeria here, that when it comes to business of cement, building materials related, there is what demand for, because they are essential to drive your infrastructure anywhere in the world. For me, I'm not surprised that it's not investing more on it, because they have seen value and where the company is going. We have said it's the best performing stock this year in that market. For me, I'm not surprised. But the good thing is that despite the the recent protest we saw in that environment, I see that investors have confidence to be taking their stake. It tells you that we must be a lot of of investment for you to take that. And also, I'm not surprised that in a sector that you know that there is a lot of potential in that industry.
So it's all about value and, of course, the focus on infrastructure building in Africa, across Africa. All right, so let's move on to Johannesburg now, right? The Johannesburg Stock Exchange. 2 more companies are set to delist from the JSE. Yesterday, Bell Equipment and Sasfin, they confirmed plans to delist from the JSE. What do you think about this delisting and how perhaps it could shake up the JSE markets, potentially?
I would say that this is as old as the stock market itself. Every company has come to the market freely and also exit freely. And also there are other factors that determine whether you should stay on the market or also you should go. As a company on the any exchange, if you're not seeing value added to your company, be on exchange, there's no need staying there. Also, if you're also meeting also your prospecting requirement as a company, you have the regulator have option to implement the list to it is a situation that it's not a do or that must be anything. It's free entry and free exit. And for me, if you see a company that is doing that, it's for a purpose. Also, if you come back from here, most of the companies that left the exchange, they are in another market. If they are leaving just go market to another market, it's a different thing. But I believe that for me, there's no need of overflogging a company delisting. Yes, we know that's going to affect the capitalization of that market in any way. But the company itself will not see the value they are getting from the exchange. If that value is not enough, also if they are not reaching, like I said earlier, the positive requirements of the exchange or the regulator, then they can go. And there are so many that of course if your compliance is not there to regulate, at the same time, the financial difficulty to meet up some duty or some responsibility as a company on the exchange. And also if they have also what we call a bankrupt can lead to what the listing. It depends on why they are going. For me, the listing is not a news. It's as old as the stock market anywhere in the world.
Okay, so you don't have any concerns about what's happening on the JSE. The bigger trend, right, is sometime in the 90s, 800 companies listed on the JSE. About now, we're seeing 252. Are you concerned about this trend of delisting from the exchange, or you just think, the survival of the fittest?
When you see a company going out, some companies also are having an interest in coming up to that market. It is done on the market regulators to make their regulation also friendly. As others are leaving, like I said, it's a free entry and free exit. Once others are leaving, and also you are in kind of let me give you either enticing them or give them incentive to come to your market to list, to boost the economy with that. But I'll tell you that anywhere in the world, to list or be on a quoted company and quoted on an exchange, it's not compulsory. You work in there yourself, you cannot want to work out. That is why I said any listing in the world is free entry and free exit. For me, when you are not seeing value for listing or you are not meeting the requirements of listing, you can leave the same.
All right, we're still going to stay with this delisting, conversation, and now we're coming to the NGX, right? And we have seen a couple of delistings as well in recent times. The likes of Union Bank, GSK, Capital Hotel, PLC, and more recently we saw MRS, right, gaining approval for voluntary delisting of issued shares from the daily official list on the NGX. Do you see this in any way, right, stifling growth on the exchange, or has and will the listing of others like Transco Power, and we have Dangote Refinery and the fertilizer plant scheduled for Q1 2025. Do you see those listings filling the gap of the delistings?
If you look at the post financial meltdown 2009 today, you can see that the company that came to exchange as listed company have added value more than the one that is in the market before now. If a company is delisting from Nigeria Stock Exchange today and moving to OTC or what they call it, that is not a problem. What matters is that what is the regulators here, our NGS regulators, SEC and others have been to attract more. There are many companies in Nigeria economy today that are supposed to be on the exchange that are not there. To make policies and I said that even in South Africa, in Kenya, to attract them to the exchange, not depending on the ones. Also, for example, now when about 8 stocks were put on a suspension or kind of for not releasing the political requirement, it shows that they are not compliant. And when it becomes something that is consistent, the exchange have no fault by delisting them. I believe that it is on free entry and free exit, I've said earlier. But the concern is that if we are seeing bigger fish coming when the smaller one is going out of the market, there's no need of panic. But I believe that for the economy to grow, to really pass Nigeria and to create that wealth for Nigeria, we want the equity company to stay. But at times, when you're going to stay on the floor or on the exchange and they are not doing as expected, when they delete, it doesn't affect a lot of, especially as they're listening, they are going to another market. And that's why to have a different market in economy is very, very important. To have commodity market, to have OTC, have a currency, you can go anywhere and play. But for me, it is now for regulators in Nigeria here to attract more. We just mentioned some few names that I mentioned that were listed recently. Good for me, yes, I say kudos to them. But I think the big feat will be that if by 2025 first quarter we see Dangote Refinery on the table, and I believe that will be a dual listing in London and in Nigeria, and that will bring more capitalization in the market to boost our capital, market capitalization for Nigeria market, make our market become more attractive because of become more have a more deep market to trade. As we speak now, the regulators should go out there and break orders, not only the ones that are going for me. Out of how many tech company?
All right. So I mean, hopefully we see, Yeah, obviously, hopefully we see the NGX keep up its performance, best performing exchange in Africa. Perhaps we'll see it continue in H2, and we've seen that recovery somewhat for Q3 2024. But thank you so much for joining us, Ambrose Omoridion, Chief Research Officer, Invest Data Consulting. Thank you for joining me.
Thanks for having me. Yeah.
All right, up next on Market Pulse, could the 150-day duty-free importation on certain food items potentially destroy Nigeria's agriculture policy? We'll get into this after this break. You're watching Market Pulse. Now we're shifting our focus to a policy initiative and, of course, its bearing on the Nigerian economy. Last week, the federal government, through the Ministry of Agriculture, announced plans to allow duty-free importation of select food items, right, for about 150 days, all in a bid to stabilize prices of items in the market. During a retreat of Africa primates of the Anglican Church, which was held over the weekend in Abuja, the president of the African Development Bank, Akinwumi Adesina, raised concerns over the federal government's plan. And of course, some other Nigerians have done so as well, right? We know he noted specifically that Nigeria could not rely on food imports to stabilize prices. For Mr. Adesina, to do so would be to destroy the country's agriculture policy. But we all feel that pinch, right? Wouldn't an immediate relief from high and unstable food prices, go a long way, right? Don't we need that immediate relief? Or should we stick to the plan, right? Stick to the script and not erode the gains made amongst farmers when it comes to local production? So we're going to get into that conversation and, of course, get your pulse on the conversation. What do you think of the directive on 150 duty-free day for food items like maize, rice paddy, wheat, and more? There's a poll which has been live since 2:30, right, up on Nairametrics X account. So join in, share your perspective. Where do you stand on the matter? Right now, joining me to discuss this is David Olujimi. He is a financial markets analyst with Nairametrics. It's a pleasure to have you in again, David.
Yeah, thank you, Joanna. Thank you so much.
Yes, it's a pleasure to have you in. What effects do you see this having on food prices, especially with our anti-gravity law, right, which, observed here, where what goes up in terms of price hardly makes its way back down?
First of all, I would like to give a background about food tariffs, import tariffs on Nigerian import tariffs on food, specifically rice and wheat. So Nigeria has a 60% import duty on rice, 70% import duty on wheat. But where the problem is that wheat that has that high amount of tariff duty cannot be produced here in Nigeria. The kind of wheat that we import cannot be produced here in Nigeria, which essentially means that we basically tax the food we eat. So basically, it's going to have significant effect. The 150-day duty-free window is going to definitely have a lot of effect. If I had much time, I would have been able to clarify some of the positions from the position of the millers, the companies who mill wheat, and some of the rice millers who basically produce rice in Nigeria.
Yeah, I mean, we can imagine, the effect that would have on the prices of commodities like bread. But do you see the contradiction here, right? Considering the president's earlier position on food security, where he expressly stated that Nigeria will not import, but produce what it eats and eat what it produces.
When the going gets tough, they say only the tough get going. We are in a tough situation. Nigerians need to eat, basically. So we've been having scarcity of there's a difference between battling with inflation. Basically, inflation data came out yesterday. We have 40.87% food inflation. That's by the way. There's a difference between having food inflation and having scarcity. So basically, we have a situation in Nigeria now where there's scarcity of food, of certain foods. For example, there's a little bit of scarcity around egg because the poultry farmers cannot get feed for their chickens, for their livestock. That is the problem. So I feel like the policy is coming a little too late, but it's just a necessary evil at this point we are in.
All right, a necessary evil. I guess we're picking our poison there. But, as an individual, do you share Mr. Akinwumi's concerns that, in a bid to attain that short-term stability, right, and comfort, right, we're risking and perhaps losing sight of the long-term economic goals?
The reason I don't share his concern is a man I respect so much is because he did a lot as the agric minister of this country. He's talking about an agric policy that was existent but is no longer, now is null and void. There is no record of a Nigerian, there's no record of an existing agric policy right now. He put in place standards, he put in place system. Akinwumi Adesina was the one who introduced dry season farming after the flood of 2012. He did a lot to ensure that Nigeria attains food security. But I think he still thinks that we operate in that same system. I'm not sure he understands the kind of agriculture policy we operate right now, which is basically nothing. So I don't share his views because I feel like I'm on the ground, and he operates from Côte d'Ivoire, where he's doing stuff for a lot of African countries. He's very insistent on African countries producing their food.
Yeah.
But to everyone, his own share, everybody's pie is quite different. Nigeria's pie is quite different right now.
Yes, I know. We know he's a strong advocate of, should I say, food sufficiency across the continent, which can perhaps explain his stance on the matter. Yeah. But do you see a more sustainable approach? Obviously, this is a short-term approach, 150 days duty-free import window. Do you see a more sustainable approach to stabilizing food prices? I know you said we don't have a specific policy around agriculture, but do you see the need for that? And what more do you think needs to be done to boost production?
The sustainable approach I see is government investing in agriculture. Government has to do what it has to do. I'm talking of government across all levels. Talking from the local government to the state government to the federal government, probably not even the federal government, but every government in Nigeria has to do what it has to do. So when you have the government operating agriculture, unlike the shareholder farmers, first of all, they have more resources, they can invest more in machinery, they have access to land. Basically, land is theirs. They have access to land. The local government can mark out 100 hectares of their local government for farming a particular crop. The next local government does the same thing for another crop. It helps. But we are in a situation where everything is left to shareholder farmers. Shareholder farmers are now having to contend with rising cost of chemicals and fertilizers. They also have to contend that if they had to contend with that, now they have to fight for their lives because the insecurity is a lot. The insecurity is a lot. So the only sustainable approach I see is a hands-on approach from the government themselves, putting their foot on the ground with regards to agriculture.
Indeed. I mean, there's a lot of infrastructure that goes into that. There's a lot of, dealing with insecurity in Nigeria to boost all that and much more. Thank you so much for joining us, David Olujimi.
Thank you very much, Joanna.
Yes. It's a pleasure. Nairametrics financial markets analyst. It's been a pleasure. Up next, right, of course, first of all, it's in your hands as regards this. Could this 150-day duty-free importation on certain food items potentially destroy Nigeria's agriculture policy? Or is it more important that we get food prices down and stable in the immediate? The poll is still up on X at Nairametrics, so make sure you cast your vote. Yes, let us know where your pulse is at on that. Now, let's get into the African markets, right? We're seeing the pace still a bit slow on the markets. They're continuing that slow start to the week across the African markets. The bears are still having a hold of the markets. There's a current assessment, of course. We're seeing the JSE down, Moroccan window down, Egyptian window down as well, 23%. NSE, Nairobi Stock Exchange, up, right? Just marginally, right? And of course, Ghana Stock Exchange, flat. That's what we're seeing across African markets. Bears evidently still having a hold on the market. And that apparently is the show today. We'll continue tracking the data across markets here in Africa. The pulse, of course, on Bamburi Cement on the Nairobi Exchange as we anticipate the multi-million takeover by Amson's group. In our spotlight as well is also Nigeria, and the question of how much of an effect this duty-free importation window would have on food prices and local production. And it's only safe to assume that currency and capital markets in Africa will continue to react, right, as predictions flow in the build-up to the US election in November. That and more will be tracking right here on Market Pulse. So stay informed and join me at 4 p.m. Monday to Friday here on News Central in partnership with Nairametrics. I'm leaving you, of course, with markets outside of the continent. I am Joanna. Thank you for joining us.